This is Simon with toughtrader.com and Trade and Perform Coaching doing the weekly, basically it's a weekly trade review. And the idea behind this is to show how I can do, how I can do better in my trading and hopefully help y'all as well. I want to cover areas that I missed that were important. I want to cover rotation sizes and any major changes during the week. So I'm going to start from big picture and then I'm going to work down to small picture, right? So let's get started. Just real quick, past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with y'all in hopes that it makes you a better trader. As I said, I will be pointing out more of the trades I'm taking. I started off with CL today, and I will be more aggressive in pointing out where my ES and NQ trades are. One of the big criticisms in speaking to one of the members in the room this week was they had mentioned that it seemed like the last couple of weeks I'd been stuck, that I was pointing out trades but I wasn't being able to execute my own trade plan, and that is absolutely correct. I've been flustered, and so I'm going to start with the volume profile and we're going to work our way from that. So let's go over to the volume profiles. Okay. Okay, so what I did and did not get wrong, right? So from a strategic standpoint, coming into the week, let's minimize this. I should have recognized that as my trap area right there. So this is Friday, Thursday, Wednesday, Tuesday, Monday, right? So coming in Monday, we attempted to break this volume build over here to the left, and we came right into this build over here to the right. That was also an open gap. I totally fumbled that trade. Actually, I take it back. I got that trade, but I fumbled it. I did not hold it long enough, and nor did I give it time for the trap. So I want to go back in specifically. I thought this was my worst trade of the entire week. Okay, and so when I wrote it down in my notes, what I fumbled is, first of all, I failed to think about the bigger picture trap pushing back in. I failed to think that 2485, what was it going to have to look like in order to get back into the range? And then how could have I told, what were the clues that once we were trapped that we were going to push to the upside? Right now this is Friday, so I got the long. This was Friday. I got that long, right? And what caused me to fumble it was my thought process. My thought process held that if we got past that volume point of control right here, this is specifically where I fumbled this date. I thought if we got past this volume point of control, we had a long way to fall underneath, and what I was picturing was all this overhead volume and all these traders that would be trapped if we got underneath this volume point of control. However, what I didn't do is conclude what it needed to look like in order to get underneath. So let's go back and look at that day specifically, right? And see how I could have set that up better. Okay, so when we go back, we're going to, let's just pull up the trade date. That was the 25th, right? So let's pull up the chart. Okay, and I find if you can't go back and look at where your mistakes were, you shouldn't be trading, right? Because that's where the most valuable pieces of our information. So here we are on the 25th. And so here's where I choked. Okay, I expected to have a nice, slow day. Number one, we opened up. I figured we were going to hold. We cleared above the opening print, right? And generally when we clear above the opening print, I did not expect rejection at the open gap for whatever reason, right? And we rolled back down, and then we clearly broke. So a couple of things. First of all, when we broke, that was my clue. When we closed below that 5-minute bar, I should have known we were going to roll lower. But the white zone was obviously a high odds location. I haven't looked at my trade log, but I'm almost positive I took this long, and I kicked it for 1 and 2 points. The reason why I kicked this, now this turned to a major change in the way that I am going to approach the white zones and the way that the market works, right? I know that this is a major area. I know that we have a naked volume point of control. There was news out at the time that something regarding North Korea, and I forget what it was, but it really accelerated the market right to the downside. So when we arrived at the white zone, what I allowed my fear to do was go, hey, we're just going to clear straight through and we have another 20 or 30 points to the downside, right? What I missed was that we had a strong negative tick, a hard push into that NVPOC, and we never even traded. We didn't even really trade. We traded one tick underneath that NVPOC. So this is where I go back and I get better as a trader, right? So I know now, if we don't close on a 5-minute bar behind that NVPOC, right, I'd have been better off, instead of scaling the 1 or 2, just going, hey, if I'm really scared of this location, let them at least first close on a 5-minute bar behind the back of the naked volume point of control. So that is now on my trading checklist, right, for a fear factor check within my own process, right? Because a lot of times when we're trading, we can't control what emotion is going to crop up, right? But what we can control is the structure that we build around our emotions. Okay, so coming into the zone, right, ugly as hell, tick is ugly as hell, and this is the biggest volume down bar of the day. See that right there? Over 70,000 contracts get done. Now what I should have been thinking, right, and what I wrote down was heaviest volume push of the day, unable to get below the low of the NVPOC, into a critical white zone on a stretch from 2,500 down to 2,486, which is a 14-point stretch on days where we've been having 5 to 10 points of range. It's almost a double in range, right? I should have been getting very aggressive. So what I changed about the way that I approach this area now is this. My rule is, if there is news, I expect that news to carry me to my most critical areas, right? And that news is the opportunity I need to push the market into the trade location that I am trying to get entry on, right? So realize that small shift, right? So in one shift, I'm asking, and this is exactly what I did. I said, does anyone know what the news is? As if, so I'm criticizing myself, as if someone had told me, right? As if someone had told me what the news was, and that I would have the wherewithal to quickly analyze all the aspects of that news and understand what was going to happen to the market. I don't. And I've coached people to that fact that they don't. So that tells me right there's a fault in my way of thinking. That zone, I should have simply gone, I have no idea what the news is, but I'm glad that there's news out because I needed someone to drive it in. If you're scared, right, at least make it close outside of the white zone before you take your loss, right? The stop is 2 points behind anyways. It's not a significant loss, right? We should be able to absorb that loss, okay? And then this also brings up additional questions, and it should be brought up for yourself, and it should be brought up for coaching clients, right? The questions that should be asked, hold on a second here. Right, exactly. The news is the opportunity, not the obstacle. And the question should be asked, if you're scared, what are you scared of, right? Because we get news in the market all the time. And if you're going to allow to go, oh my gosh, I don't know what the news is, well, hell, I don't look at the financial numbers. I don't look at the econ releases. I don't look at the news even before the market. I hardly look at what the other markets are doing before we open up, right? I pretty much know my trade plan before I ever arrive in the morning. So that's incumbent on me to switch my mentality to going, hey, not only is this a key location that I need to be prepared to take, this is a key location. The night before, right, that white zone, I should be imagining when it hits, I've already shown tons of pictures, right? It's always going to look exactly like this. Or that should be my assumption, right? If it's nice and gentle, great, so be it. But the assumption is going to be that they're going to hit that zone with maximum power. And there's nothing in this world in real time within the split second here, unless we go through a consolidation at the white zone, there is nothing in this world that's going to tell you that it's going to stop right there at the white zone, besides the homework from the structure and from the volume profile that we're building up. And in addition to the volume profile, you had the NVPOC and the TPO. All of them confirmed this area, right? So additionally, so I took the trade, right? I put on the risk, and then what did I do? My sense, this was my next mistake. My sense of anxiousness had risen significantly, okay, because I didn't know what the news was, and all of a sudden seconds seem like hours, right? And the reason why I know that is this trade from 86 and a quarter achieved its 2 points in less than 5 minutes, and I already taken a 1 point scale before we had achieved that 2 points, right? And when we got to that second point, coming in when I was up here, I was going through and describing this trade and said, hey, that's my key location right here, and I'm ready to take it, right? That was my trade plan. And I took the trade, and then as soon as I took the trade, I allowed what I call my weaker version of myself to take over and go, but what if the news is bad, right? So now all I have to do, and what I've done every single morning, I hope there's a news event so that it'll take me down to the critical areas, because in this particular environment, we cannot get enough of a stretch to get key locations. Now, next, this is my biggest down bar right here. We discussed this all week in the room, right? Biggest down bar, heavy volume, heavy negative tick. I know that as soon as I get above this bar, that the sellers have lost momentum. That means two things. I do not know. Now, I do not know whether we will hit a new low or not. It doesn't mean that. What it means is in order for them to maintain momentum, you see how they try to stop it right at halfway at that bar? As soon as they closed above that bar, these guys were in trouble, and they were at the minimum going to need counter rotations to cover if they didn't cover straight away, right? So we then use our tool, right? Our normal tool, 50-60 back, right? That was our first measure as to where our next alternative entry was, right? And our stop had to be 1 point below the low of that low, and since it was a white zone, I probably would have put it 2 points below, right? So market comes back to the 50-60, right? Comes all the way down. Now realize the exercise you have to go through here. If we took the white zone, you already got your scales, right, within moments. This is from 86 and a quarter to 92 and a quarter. So you've already taken approximately 6 points maximum favorable excursion, right? I'm going to assume everyone would have gotten their 2 plus your trailers, right? Now roll it back over. You know that once they got over the biggest down bar, momentum's done. So where are you looking to acquire or add back your position? This goes into the strategy of, hey, we're not in a bear market. We didn't close below an important level, right? So I want to use the pressure back in, right? Even if it's smaller size, I want to use the pressure back in to add back into that position with a stop just below the white zone. So notice the other key factor here is, notice, had the news been really bad, right? So think about this and ask yourself the question, if the news is bad that comes out, random news comes out, right? What is the behavior on markets where the news is really bad? And I can answer that question. News that's really bad in markets where the news is really bad, they don't ever let you get above this bar. They keep cascading down. This was your notification that the news was BS, right? So then we push through, and what you should be writing down here, right? And I spoke to one of my coaching clients, and they're like, dude, there's no way that's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 5, 45 minutes, a constant sell bar all the way down. And I'll agree with that. But look at the size of these sell bars and look at the size of these sell bars. This is not the same intensity. All we're doing is coming back to a negative 600 tick. We retap that white zone, right? And once again, you're going to see volume did not increase, tick did not increase, and then into the low, we actually ended up with tick divergence on this bar right here. So at this point, I want to ask myself a simple question. If this bar sold everybody out and we were able to get above, what's my logical target back up? So when I'm going to come back up and I'm going to say from the swing high, which had occurred the prior day, right, to swing low, we've already come back to the 50. The 62 is the next logical area. finally followed up by that 24.96, that open gap, and the white zone above, right? If we don't break this white zone, it's most logical to come back and test this white zone, right? Now, the question you have is, the question you want to ask as a trader is, how are you going to manage this trade? Recognize that we should come back up here. Well, there's a couple of ways you can look at it. First of all, we just moved from 2,500 to 24.86. So if we get a half, if you load it back in here, right, thinking, okay, we're going to have another extension back up and we get to the 62. Your 62 is your next location. I'm going to assume you didn't wait for the backside test of the white zone, that you loaded back up, assuming you got this original along, you loaded back up at the 50 retrace, right? So there's a couple of conflicts we have within our rules that you have to go over and figure out. I've said many times before that when we close behind the 62 retrace, so I want to clarify this because these are questions that came up during the week. When we close behind the 62 retrace, I've said often that that is a danger sign, and indeed that is true, except that that 50-60 retrace when we close behind is in reference to the opening print, to the swing high, without breaking the 50-60 up or on trend days up. When you're using the 50-60, off the lows to scalp into a secondary position so you don't have to chase up, that rule is no longer true because the range is much smaller. You're already dealing with the idea that we've already had an extreme move to the downside, and that low bar. So remember, this bar right here is the same bar I used today in CL. It's the same setup that I used in CL to capture my long, right? So I'm going to let them stop me. Again, I did not do this properly. I want to be clear. I did not do this properly. And had I done it, I would have said, heaviest volume bar, I need to see them get behind that bar in order to break me. And if they get behind that bar, odds are we do have a leg lower. Okay? So never gets behind that bar. Now watch it creep up. Okay? See it now. Goes sideways for a long time. Tick gets positive. Biggest positive tick of the day right there. Right? Notice we push down one more time, but all we're doing is consolidating now at the lower level. We're consolidating at that 24.92. So what are we doing here? Come back to the volume profile. See this space in between right here? See the space in between these bars and that bar right there? See how poorly auctioned it is? Okay, so when you wonder, when you're trying to complete in your mind what the auction is doing, this area between this point and this point was horribly auctioned. So what this market is doing right here is filling in the space that's poorly auctioned, and we're building volume. That's why, again, when we go back to the volume profile, you end up, see how there's no build in here, and now we end up with a build where no build existed. See that? Where we had no volume, now we have sun volume. And then if you look right here, see how we had our this would be a multi-day volume point of control, right? And you would do somewhere, just guessing, approximately there to there is the multi-day volume point of control, right? Wife is asking me to bring home milk for the kids. I can do that. Okay. That's the multi-day point of control, right? Which is 24.92 to 24.94. So guess what I know has to happen? This was my support area. This is the area we built volume. Now go back to your chart and look how that filled in. This is 24.92. This is 24.94. That's where Globex low landed, by the way, right? So watch what it's doing. We're filling in volume, filling in volume. Now note, if this was a weekly chart, right? Let me copy this. So there's not so much crap on there. And erase everything. '25th. Okay, again, the more you can think in terms of multiple days, right, in time frames. So pretend this, so now instead of pretending this is a 5-minute, right, pretend this is now an hourly chart, right? And what I would be saying to y'all, just like I worked over from the week, is I'm going to say, hey guys, you know what we just did in here? We spent a ton of time building volume, right? We repaired volume. That's what the market looks like. So this is really important from a mind over markets perspective, shifting over in a volume profile perspective, and then translating it, which is the hard part, translating it into your head, what's going on. A lot of people will look at this, myself included, when you don't understand that this is building energy, right? This is building energy, that when we pop above it right here, right? That when we popped above this right here, you now had a solid block of support underneath. The reason why that's as important is look when we came back and backside tested that, popped right off of it, and I think we tested it once more, popped right off of it. Okay, now what traders won't like about this is that the whole area is a build, right? Which means when you come back and you take it at 24.92, you have to allow it all the way back to 24.88 in order to hold, right? But if you look at that entire week, once we got over that build, what the market was telling you was, we agree on price down here, and there's no need to renegotiate this, right? So if you got long right here, you just simply didn't want to see it close back in. You wanted that long bar right there to push, and that's exactly what it did, because everyone who was shorting looking for a continuation lower got trapped, and we pushed to the upside. That's exactly what happened at that, hold on a sec. At that particular juncture, right? So now when we go through the rest of the week, you know that you filled in that area that's poorly auctioned. As long as we hold above that area that's poorly auctioned, right? Look how the market actually treated it. Okay, now pretend this is all intraday because I've pointed this out. This was the area that got fixed. Once the area got fixed, the market popped above. We tested, again, I didn't read this properly, and I didn't read it properly all week. This provided the support. I want to show you what that translates to now. Now we have this big level, and so you can say to yourself, hey, unless we travel below this point, right, there's no way that the market can go lower, right? I want to be clear. It doesn't mean the market won't go lower. It simply means that unless we travel underneath this point, which means that every time we're taking a dip after this point, right? So originally, see how we had this build to get underneath to the left? If we couldn't get underneath that build, there's no way for us to access this, right? Then we get above this build. If we couldn't get underneath this build, there's no way for us to access this as well. So then you had to look and go, hey, there's one more door left, right? There's one more door left, and it's this door right here. If we get underneath this door, we then have this poorly auctioned area right here, and then we have this build right here, which should, right, this area in general should absorb the market first time we get down there. We pushed down, we rebuilt, then the next day, this was critical, right? See how we closed up here? The following day, you should have known, and I should have known. Unless we get underneath the underside of this belly, which would have meant below 24.90, right? And then we got below this little poorly auctioned area right here, that we were most likely going to come back and re-auction. But if we didn't get below on the 26th, right? If we did not get below on the 26th, the market really had no choice but to come back and recheck, right? Starting here and here, recheck on these volume areas, and that's exactly what we did. But then notice how the character changed when we trapped everyone. We started one timing to the upside right into yesterday, right? So you see how we were one timing to the downside. The one timing to the downside ended on this date, right? And that was our first higher high and our first higher low from a day perspective, right? The trend now changes. I'm going to go from the volume trend right there. And if we don't break that trend line, I realize that's a non-conventional way, but what I'm trying to do is capture where all the volume is being built. We basically formed a wedge based on volume, not based on range of the day, based just on volume, right? All the volume, we were making, value was shifting lower through the week, right? Originally we were shifting higher, then we shifted lower. We attempted to break this balance area. This held us. There was no sellers interested below. The market was interested in rebuilding. That's exactly what that says. And then when we got above this build, and what I should have known for the balance of the week and the way I should have structured my trades was this. unless we close below 24.90 at this point, I should be putting, and I got it half right, so I didn't short anywhere through this, right? But I should have been more aggressive in going, hey, unless they find a way to push down past 24.90, right? I should be finding every opportunity I can get to get long. And then once we started picking up the shifts in value higher, as long as I wasn't trading below this build right here. So now we built a big fat build right here. So I'm going to say, unless I get underneath this build of volume, it's a lot of volume that went off there, right? So now let's go look at these 3 days, starting on the 27th, 28th, and 29th. Knowing that my underlying characteristic should have been, hey, we attempted to break, we failed to break, we trapped back in, we built a big volume base here, and unless I get below that, starting on the 26th, what do my opportunities look like? So if we go back to the chart, it wasn't. I was mis-executing, Robert. I was executing horribly all week. There's no question about it. There was no timid. I just wasn't. I wasn't on. That's all there was to it. I took my trades and then I bailed out of them really quickly. Yeah, it was just a mental thing. I either didn't get to my zone, missed my read. I was just one step behind the entire week, and it complemented today ultimately with I was long NQ. And I didn't take my trade station out of, I had it in demo mode, sim mode, instead of in real trading. So luckily I caught CL this week, but I traded pretty horribly this week from an execution standpoint, right? So this is the whole reason why I go back, is because I want to explore. So what made me timid there was that so it was interesting. Actually, Robert asked a real good question. What made me so timid? And Peter touched on this in the room. I have a fantasy about markets rolling down really fast and hard, and I'm not in the right part of the cycle for that to happen. And I've really got to check that fantasy, because it makes me see shorts that don't exist, or it makes me anticipate potential shorts, which causes me to stand back. Also, the other thing and I had to talk to my own trading coach about this, I don't know how to factor in the concept of potential war between North Korea and the United States. To which he responded to me very, very clearly. He laughed and he goes, Simon, if there's war between North Korea and the United States, he goes, you get stopped out 2 times back to back and you go home. He goes, that's what happens if there's war between North Korea and the United States. He's like, stop worrying about it. Stop trying to avoid getting hit when it happens. He goes, just take your trade. And I was like, okay, Dr. Jeff, got it. No problem. So that was very helpful. So now starting on the here we go. Starting on every day, even without the zones, right? Without the work of going in and putting in the white zones and the critical areas, right? Look at the trade setups. First of all, 2501 down to 2492. Again, heaviest down volume of the morning, heaviest negative tick, biggest down bar. Now I had 2 options on this that again was the same trade. Even if I missed the long at 2492.50, and by the way, I was actually prepared to go long. I had the zone at 24.92 on this day, and we just missed by 2 ticks because I nailed NQ on this particular trade, and I had a very nice day on the 26th with NQ, but I did not nail ES because it didn't hit the white zone. But even if it hadn't hit the white zone, and we've been working on this in the room, right? Heaviest down bar. Once I get above that bar, all I had to do, right, there's still risk, but if I just drew up my first 50-60 retrace with a stop on a close below 24.92 and a quarter, right, knowing that I had my volume build behind here, right, and Bill, if you're in the room, I know you addressed this with me because you thought the zone should have been 24.92.50. I wanted to be closer to the meat of the volume back here over here to the left. So anyways, I was off by 2 ticks on the zone. But nonetheless, I still could have attacked this with a 50-60 retrace. As a matter of fact, I had 2 opportunities to attack it because I had a second 50-60 right here. And I did not. So while this isn't textbook in the room, right, there's really not a setup for taking that in the room. That is a setup for me, and it's a setup for my coaching clients. And several of y'all, including Ron, you caught that move on both NQ and ES to the upside. I know Ron's the only one I know for sure caught it. I should have caught this. This was a trade from 24.94 all the way back to 24.98. That was a clean 4 points. It was an excellent trade, and if you look at the move into the high, right, highest tick of the afternoon, failure to hit a new high, and then responsive sellers came back to the downside, and that goes down as another trade that in recent weeks I've been nailing this trade, right? I did not call that trade. I did not see it, and I was probably just so frustrated from not getting my 24.92 that I was very, very agitated on that particular day. Come to this day, I totally screwed this up because I willfully chose. I actually had a zone here, if I recall. I actually had a zone here, and again, I let the news idea interfere with my trade. But if we go back through, and this is painful for me, guys, because basically what I'm saying is I did not execute my own trade plan. I didn't lose any money, but I left a lot of positive P&L on the table. These are areas where I want to improve in next week, right? And it all started going back to Monday where I mis-executed my own white zone, right? And then I didn't easily, because I was allowed myself to get agitated, I didn't roll up to the, hey, if we get over the strongest down bar, work the 50-60 back. I didn't execute on that. And had I executed on that, my week should have been a 20 or 30 point ES week, in my opinion. Or let's be more reasonable. Let's call it a 10 to 20 point ES week. And I simply didn't capture it, right? And Ron, that goes back to what we spoke about earlier. I think there were opportunities. We just didn't nail them very effectively, right? So if we look into the low, number one thing you're going to notice is heaviest tick, but on the low, we actually had tick divergence. Several of y'all pointed that out at the low. Additionally, we had a 12-point rotation, and on that rotation, we were still holding above our key area back here to the left, right? Tick divergence, heaviest sell bar. We once again got above our heaviest sell bar, and all you had to do in order to gain entry to that trade, even if you missed the low, right, is a 50-60 retrace. Now I want to talk about this for a second and pause. A lot of people will go, hey, my stop from 24.96 is all the way back to 24.93 plus a point. That's right. There's no perfect way to solve this, because when we're using the 50-60 draw off the low, there is, you have to allow it to come back and test the low and even one tick or two tick the low for an attempted double bottom before it responds back up. Again, I totally missed this trade. And here's what's funny about this whole thing. I had this read, if you go back to last Friday, I had this read down. I worked on this setup for weeks, and this is where I went long ES with no hesitation on Friday afternoon of last week, and I caught this whole push up. As a matter of fact, I remember because I was in a coaching session, and my last scale was 24.99.50. I remember it quite clearly, and I worked on getting that trade executed, right? We had the heaviest push down here, right? So if you look, heaviest push down. Once we got above it, sellers were trapped. All I had to use, even if I didn't get this low, right, was the 50-60 back, stop 1 point below the swing low, right, for that pop to the upside. And as a matter of fact, I didn't even wait for all that. I took it all the way. I took it late, all the way back over here, because I took it at about 1 or 1:30 in the afternoon. This is where I finally took the trade on that entry. I was all gleeful about it, but then for whatever's bothering me last week, whether the twins at home were not feeling well or my wife wasn't feeling great, I don't know what was off with me this week. But again, these are repeated trades where these are in our regular playbook, right? And I should have been executing. So it's right for me to come back in and say, hey, that was the trade I should have been looking for, right? So once again, pushed in, huge push to the upside, knowing again, if we don't get, when you're taking this trade here at 96, you just have to know from a swing trade perspective, right? You have to have in your mind, we have a huge insurance policy in our back pockets over here. I understand most of you aren't going to use that insurance policy, but if we can't get below that 88 to 92 all week long, all we should be hunting are pushes down. This day I didn't have too hard a time with. I'm just going to cover this really quick. This is the 28th. You only had one choice on this. This was a gap down. The support level I actually had down here at 92. It was, or maybe it was 95, 97. We never pushed into it. The only thing I'll point out is Once we finally closed on IB high, I chose to pass on this trade right here, this 50-60 back, and I went back through and analyzed it, and I was all right with it. This was the analysis that I did. It was a 3-point counter rotation. This is the only place I did not get upset with myself this week. It was a 3-point counter rotation, right? It in a market where we've been having 10 to 15 point downside ranges, and I'm not trying to trade everything perfectly. If I'm going to take a small rotation, it's going to be an NQ where I'm likely to get a quick snap if that's available, but I'm totally okay and totally fine. 3-point rotations are not in my menu. That's all there is to it. If the market runs 100 million points, this was a non-traditional open drive higher. And I have one more note from the prior day. This is non-traditional open drive, right? We filled the gap and rejected out of it. That's generally not bullish. And what I was hoping for and was willing to do is I was hoping for a test of our white zone that was sitting down in this area, and it just never happened. This day was fine. Mari called me out on this trade. He said this trade, I went long on this bar about right here at 25.04, I think in a quarter, looking for an open drive higher. NQ actually gave the open drive look, and ES did not, and I ended up losing a point on this trade here, which was totally fine with me. A couple things about this. I do believe we would have ended up with an open drive higher on this day had Trump not been speaking at the very end of the day. That gave people reason to, and plus we had a Fed speaker right in the middle of the day. So if there was a bad read, that was fine, but we met all my requirements for being aggressive off the open on this trade, which was tick opened up at over at positive 800. The first 5-minute bar closed at the high, which was again one of my on my checklist, right? And as long as we held the first 5-minute high, what made me bail on that trade earlier, even before we had missed the low print, what made me bail on that trade was NQ was off to the races and ES was not following after 15 minutes, and that's what made me quit that trade earlier. Otherwise, it would have been a 4-point loss essentially on a stop on this bar. Would have ended up being a 4-point loss. As it was about a 1-point loss. Again, I would take that trade every single day and twice on Tuesdays. The risk reward is fantastic on that. And also going back to Bill, I don't know if you're in the room. Bill also commented that the only psychologically he thought, Bill and I do quite a bit of work together, and he said you pretty much pre-market had determined that if we gapped and showed open drive higher, that you were going to get long on that first bar if it closed on the high. And he goes, you simply didn't, he told me, he goes, Simon, you simply didn't have a plan B, which explains why I let all the opportunity go down here. I got so focused, and what I wanted to make sure that I did is when I grabbed this is that I did not kick it out for 2 points. I wanted to make sure that I got my 10-point stretch to the upside, which I thought was doable from that location, 8 to 10. And I didn't want to kick the majority of my size out at 2 and 4-point rotations. I wanted to make sure I let it stretch. I'm pretty sure if you take this bar and move it right over here, that's what the day would have looked like. We would have had sideways consolidation. I mean, this is if you X this out, take this bar, put it on top, this is perfect open drive higher, sideways consolidation, then continuation up to the high, right? And at any rate, long story short, I should have been in there. I should have adapted when we pulled down here, and I didn't. So the good news about all of this is these are all trades that, first of all, through none of this was I looking for shorts, right? And no point that I said, hey, this thing's a short. No one got, as far as I know, no one that I spoke to in the room, no one got run over on the short side that I know of. Really important because there's no hole to dig out of, right? The second part is there's a ton of room for improvement going into next week, right? And then the last piece to really take out of ES for this week, the first hour, almost every day has been open auction. See that? Every single day has been some variation on open auction, right? Open auction's really, really tough to trade because you get in and it just whips you back and forth. I don't consider this any big deal, but we've been going through this whole series, right? This was a delayed open drive higher, then it went into balance. But almost every day we've been opening up an open auction. until the range expands, open auction is not that bad if the range is 10 points, right? But when the range is 4 points in its open auction, it's, as Ron was telling me earlier, it's almost completely untradeable. I would go easy on yourself in the first 30 to 45 minutes. It really improved my performance this week. I did not get buried on any scalps through the course of the week. It really helped significantly. So the last thing that I want to touch on before I leave for next week, right? And I'm going to go and touch on CL here in a minute. When you look on a 15-minute chart on this thing, right? Okay, we're one timing the notes you want to take into the weekend. We're one timing to the upside, right? We're making higher highs and higher lows. Can that break? Yes. The first clue that that will break will be a break of this trend line, right? And it won't be a little break. Let it break, like actually let it get a violent break. I want to give you an example of that so you have a visual of what that needs to look like, right? See that uptrend that we started there? Everyone obviously sees it. Okay, we can learn from the past. What were the characteristics? A, we had an afternoon where we closed on the low and just below the lip of that upper trend line. B, next day we gapped down, failed to fill the gap, and we had a pretty hard trend down, right? C, we expanded range considerably, both in the first hour, right? So the clues were, expanded range in the first hour, right? The size of the bars. Look at how big the bars are getting in here. Look at the size of the bars in the first 5 minutes all the way through here. Massive expansion, almost 100% size of the bars. So you want to have a checklist that goes, how do I know that things have changed? And that checklist should say, what is the average size of the bars preceding days? What are the size of the bars today? If you see bar size double, you know that there's been a change in the environment. Number two, if we have a gap down off of an uptrend, right, and we fail to fill the gap, and then we get below the first 5 minute low. Warning, Will Robinson, let it stretch, right? B, you're looking for the hardest press down. Again, when we finally trade, notice all the way through here, we cannot trade above the down bars. When we finally trade above those down bars, that's where your long side entries started working really nicely, and you avoided a ton of pain. So everyone knows that we're extended. Everyone in the back of their mind goes, gosh, I don't want to get caught in a big down day. Your model for that is on September 5th. Okay? Just go look at that. Break of trend line, September 5th. You have a pretty good idea. The other thing I want to point out is we're in the very top fifth of the market, right? We'll tend to not have follow through on down days. And if you look to the left before we started that uptrend, just like this week, we had a big volume build right through here. See how it pushed into, instead of just tagging. So this is what I mean by the insurance policy. See how all the volume build, okay, so this is a little deceptive. The majority of the volume build's actually over here. If you look on volume profile, I'm sure it'll confirm the same thing. It's more like that. This is where the majority of the volume went off. So even if you thought, oh my gosh, it's going to zero, right? When you're looking at this, this is your insurance policy. Now, if it blasts through that insurance policy, yeah, you're in trouble. B, that may cover a whole 10 points worth of range, but at least it gives you a location to start looking. And again, guys, I've been coaching y'all on this in one-on-one sessions. You can let it get above, once it gets above that weakest bar, and then start looking for reasons to work that trade, knowing your stop's back to the downside. This is a significant stop from here to here, guys. Okay, so it looks easy on paper. It's not that easy in reality because of the stop that's required to work that trade. But once you made it above that hardest down sell bar, and you held your insurance policy, i.e. volume to the left, right, for a push. So here we created the new insurance policy, right? So now we have it over here. So where's our insurance policy over here? Well, there's two sets, and I pray we don't get into either one of them. This is your first insurance policy over here. This is your second insurance policy over here, right? And I hope we don't come back for either one. I'm looking, Randy. We did have a busted white zone on September 5th. Okay, well there you go. But if you look, there was one underneath. right? And that, by the way, that white zone, just so you know, in case you're criticizing yourself, Randy, and you go back and keep the count, I remember that. That was the day that white zone got busted on a news release. Again, it was related to North Korea somehow. And the busted white zone from that date, even if it had busted, look at all the other times we pushed into the white zone. I'll go back and look at it in a moment, right? Just look at the number of times the white zone gets hit on volume, right? And just go, and then you just have a simple decision to make. If news comes out and it busts the white zone, that's what my stop is there for. I'm all right with it. But we've had hundreds of white zones, right? And if one busts because of news, well, that's okay, right? Because then all the others I miss because I'm trying to interpret the news. Or you just go 59.50 to 57. Got it. So let's see what that looked like. Oh, yeah, it makes sense. To 57, you say? Oh, you know what that is? That is a... Why would I have a white zone there? Oh, it was a 24-hour point of control is what it is. And you'll notice, so look at how that treated that while we're on that, right? That was the white zone. That was the news. You can't do anything about that when it flushes. And also, if you look at that white zone on a 15-minute, you sure it was 59.50 to 57? Because if that was the case, it didn't bust. It just didn't, it came in. We tagged down to 59 and we rotated back up to 62, 63. It gave you 2 points. So if you can double check that, because we touched right there, clearly touched before the news came out, and then they swept it, right? But let's pretend like they swept it anyways. So what's the number? -2? So it had to be this, right? It had to be down here like that, right? It had to be 57.55 then, or 57.50, 55, right? Okay, cool. So check it out. This makes perfect sense, right? Busted white zone, right? On news. Here's your backside test. Now, I remember this day perfectly because who asked me this question? James did. And he goes, Simon, what about the backside test? Okay, so let's go through this for a second. Okay, we're using 15-minute bars, but that's fine. No big deal. The zone gets busted, right? What does everyone know about that? The backside of that white zone is usually a refund point. Now, look at what you were combating. This was your heaviest downside move. Let's do this insert. Okay. Heaviest volume push. Okay. Biggest bar, heaviest volume push. Okay. Really important area. Okay. But then after this series of small bars, this is the next biggest bar. So this is a riff off of what we normally do, right? But what do we know about these bars? Look as the bars are expanding to the downside. See how they just can't trade above them? It's pretty clear, right? If you look at it, it pretty much looks like Armageddon. I don't know if I had a zone down there at the bottom or not. I imagine there was a zone somewhere down here, right? So I have no idea if there was tick divergence or not. I'm not going to pull up the tick chart or this will go way too long. And I want to go relax for a little bit with my kids. So there's the low, right? Now I know, see how we try to get above that bar and rejected? Okay, as soon as I close above 24.50 right here, right? I know that I had very heavy sell volume here. I know I've gotten above this bar. I now want to start working my 50-60s back, right? You've got to do the math on what your stop's going to be through here, right? Not only that, but I'm stretched from 24.70 to 24.50. Anytime I'm down 20 to 25 points, I know that's where I want to be hitting. So going back to James, I remember his question very poignantly. He asked if I wanted to short the backside of the white zone, and I said I did not, that I wanted to be long. And I think I was long NQ, but I don't remember exactly whether I was long ES or NQ. But I wanted to be long, right? Why? I'm down 20 to 25 points. That's usually exhaustion in ES. I want the counter rotation, and I want the move back to the upside. And I'm very cautious of that 50-60 back after we've stretched so far down, right? So push. Now notice, here's the white zone. And also notice I haven't gotten a shot at getting long on my 50-60, right? I'm going to draw up my 50-60. So unless I just went long right here, right, which would have been tough. That's a long at 25.52 with a stop at 24.43. Not many of us, including myself, are going to take that, right? So we push up. Here's the push. There's the 50-60 back, which still puts me at 24.50. I still have a big stop on that, so I'm probably going to have to cut to 2/3 my normal size, if not 1/3, to help me with this trade, or a stop behind the 62, which I really hate on this particular setup. I simply want to stay in this trade if I can at all, and that's why we pushed right into the close. But if you look to the next day, had there been enough time, we could have easily pushed to 24.65, which is why I was very reluctant to short the backside. So then that comes up for a natural question. Well, do you take the backside for a short or not? That's a question you have to answer in your own trade plan, right? I know once I get this set up, I want to focus on long side trades, right? Once I get above that last print, unless we're in the very bottom of the market, I want to focus on my long side setups, and I'm looking for pushes down to get long side setups. You'll also notice the other frustration that I noted was that these were 10-point rotations, and it was a clue too. All of a sudden the size of the bars got incredibly small. So if you were waiting for a fat rotation down, you just never got it. It forced you to come in on a smaller bar to get the push up, right? That's just part of the deal. Guys, give me just 1 second. My lovely wife's calling, asking me where I am, and I'll tell her I'll be home shortly. Hold on. Hey, I'm doing a webinar, sweetie.
Oh, sorry.
Can I call you back in 10 minutes? Okay. Okay, take care of my lovely wife. And then you'll see this continued push. Once we got above this, you'll see that continued push. Again, the same theme. When we're getting heavy pushes down, we get above that last heavy push, and it's generally been off to the races in this market. That does not always hold true, right? So that's my 2 cents on ES. That's where I could have improved. I've written, obviously you can tell from my own criticism my own writing. Oh, we were going back. So the first thing is next week, unless we break this trend line, don't even worry about the short. Just look for downside rotations and pray they get them down, right? Also notice on the close, this is the end of the quarter, but this is the biggest volume bar here on this day of the entire week, right? Maybe the entire month, really, since back over here. And a couple of things. Number one, it's important that we get over that volume bar right here. It's going to be important that we get over and hold above. If we get underneath it, we probably are going to get some kind of rotation back. The other thing you'll notice is it wouldn't take much of a rotation. 25.16, if we get 10 down, that puts us at 25.06, and that would break that uptrend, right? It's obviously going to take from where we're at. The low of the day is 25.05. We're going to need at least 10 points down to stop one time into the upside. So I don't even want to consider shorts unless I can at least demonstrate that I'm able to trade below prior day's low. Otherwise, I'm constantly on the vigil for looking for long side trades. Same thing in NQ. I'm glad NQ finally broke out. That thing's been a while in coming, and we finally got it, right? So does anyone have any questions over what I touched on right now? I'll leave the floor open. Cool. Okay, so the only thing else I want to touch on is oil really quick. People had some questions about it. Where's my oil chart for today? Okay. Just quickly, Matt, I think it was you that asked. Matt, you're Trader Santa Fe, right? I think you asked me earlier. You were asking whether I was taking the long under VWAP. I don't care about VWAP, especially on balanced days. The only thing I'm going to use VWAP for is when we're trending one direction or another, and then I don't want to see a break of it. But I'm not going to particularly care about VWAP, other than I know there's going to be people trying to trade against it, but I don't particularly care. Additionally, what I saw today that was very interesting. Here's yesterday's low, right? We pounded against yesterday's low, right into support, and I'm always willing to take the counter of this trade each and every time. And my goal was to get back up to this location. That's exactly where it went, and when we're in balance, is exactly what they did. This tells you they pushed very hard to break it, and unless they got below 51.22, very low risk entry. And I thought there was, I mean, obviously that trade from 51, I think I was in at 51.28, and there was obviously a potential for 50 points, $500 a contract. That's equivalent to 10 points. Although, granted, I was out of the majority of it in the mid, and I was very happy with that trade. I think I came out over $200 a contract on that, if I got that right. My math may be off a bit, right? When you're the most important thing that happened in oil this week, okay, was when you look at volume profile, was the breakout. Where is it? Guys, if I'm going too fast, just slow me down. Right? Someone told me I talk really fast. I don't cover stuff. When you see it build energy, expect a vertical move. Right? When you see it in any market, build energy, expect a vertical move. Build energy, expect a vertical move. This built energy in a very odd way here. We got the vertical move here. This was a weird build, but you'll see when we had these, see how we started one timing? So we started one timing to the downside. See that? Then we broke, oh, excuse me, I apologize. Let's go back. Shift. Wrong chart. Look the same. VWAP's only important if it's actually moving one way or the other, Randy. If VWAP's like what's a good indicator? It's like it's the same as a moving average, maybe a little bit heavier, but it only matters, like it only really matters is if they're moving it in a direction. When it's balanced, they're going to run over VWAP all day long in any market. Okay, going back. Okay, we build energy, right? So if you look over here, we build energy, vertical move. We build energy, vertical move. We build energy, vertical move. We got the vertical move without the energy this time. Build energy for just a few days, vertical move. Build energy, right? Vertical move, right? And this move exhausted to the upside. So I'll go through the same thing with y'all on oil. If they don't break all this volume to the left, this is support. It's clear, right? You don't need any expertise in volume profile to see that. There's a ton of volume there. It can get through, but if you look in the past how it's treated it, right? When we build, so see when we build volume and we get underneath, right? See how it pushes right back up into the, here's the volume build. See how it pushes right back up and rejects? Now, I'll grant you, we opened on this day and we pushed all the way through and closed at the high of it, right? And then we built energy and we traveled all the way through the bottom of it, right? So it's not always perfect, but you'll notice in both cases here, we weren't able to really break the top of balance or the bottom of balance. When you see a long, see how the volume build was spread out here, and you ended up with a sloppier series of breaks. But see over here where the build is really tight and compact. See how clean the break was to the downside? It was consistent move, right? See how tight it gets in here? See how you can see the, see how you can build, we're building to a head. downside break, right? So over here, right, you can't get any time. It's not even a wedge. It's just a straight up, all the volume is right in there. You're looking for a big break off of that. That's a serious breakout with a serious amount of energy build. It gets narrower and narrower, and then it finally explodes, right? Just like a water tank, okay? So we build energy for sideways move. We attempted to break out, right? So if you look, this was the biggest build here, right? This was, right? That's at 52.18 to 52.01. Now, this brought up a tricky situation, and I want to make sure everyone understands it so that they know what to do with it in the future, okay? When you see a series, when you see a bar that looks like this, okay? So just compare, just really relax. It's not that hard to see. See these bars, how they can't get over them, right? This is the only one we've gotten over so far, right? See how we can't get over this, over this, over this, and they keep going down, right? The moment you get over them, notice, see how we got over this bar and it ended the downside momentum? See how they started snapping it back up through here, okay? When you get underneath this, when you get a bar like this, what I expect, right? What I expect is continuation in the direction of that bar. And so did everyone else. That's why when we got back to the mid of that bar, buyers got there. I don't care if you have a zone made of platinum down there at 52.16 to 52.07. Once you're underneath this bar, right? So this zone did its job. I had no way of knowing that this bar was going to break, but if I see a bar like this and I trade underneath, I'm very, very leery. Biggest lesson on CL for the week, hands down, and it applies to all markets. Does not matter where you're trading. I can show you examples of that over and over again. Okay, it's never perfect, right? It's not necessarily easy, but as we dig through this, right? So notice, okay, see what it looks like when it doesn't come back on it? It never gets underneath these big bars, right? See when we get a bar down, how it never gets back over these bars. Notice that once it gets over the big bar, right, the majority of the downtrend never traded below the 50% of the breakout. Yeah, I agree, Randy. I saw that. I thought it was I was so frustrated. I had it loaded up in demo. What can you say? It was just a bonehead move. So, I mean, that smacks because that would have eradicated my whole week and given me a beautiful profit. Notice as soon as you get over that last bar, it doesn't mean that it goes straight up, but it really fixes the PA problem. Notice here on this breakout, see when we closed underneath? See how they long liquidate? Now sometimes they long liquidate in a big way, but this bar was very unique. This bar was a breakout to highs that hadn't been touched in a long time. This is a bar within range. So it's a different kind of bar, right? You'll notice again, see this last bar up? See when we get underneath that last bar? See how they tend to long liquidate underneath? So I'm not going to go through all the variations on PA that can happen in a bar like that. But again, you'll notice heavy press down. They get back up over that bar. I'm working the long side of that thing, right? Again, when we're heavy bar down, when we get over that bar, I'm looking for ways, and it's not easy, right? This is a big freaking range right here, but I'm looking for ways to work this bar. When we get this last bar, if we can trade underneath it, right, which is right here, see how they couldn't trade underneath it? So see over here, see how this is the last bar, the last push up, right? Notice this is the bar that trades underneath the last push up, and that starts the rotation down. Again, through here, this is the last push up. Obviously, this bar clears out everything. Now watch on the push down. On the big bars is what you're looking for, right? So see how push down, see how we can't get above this bar? Now we start the push down again. Huge push down, final exhaustion as we get over the last exhaustion bar. Now it starts working everything to the upside, right? So it obviously isn't that easy, or everyone would be just looking for these bars. You have to put together the volume profile along with what the market's trying to do. But those bars and the quality and the size of them tell you a lot about what the market's trying to accomplish. So anyways, I'm running out of gas, guys. I hope that was helpful. Anyone have any questions? The smaller the bar, the less the value would be the rule. So I try to do it on 15 instead of 5. But then I switch down to the 5 to get my entries. Or smaller, sometimes 500 ticks. But I'm looking for long side execution on that trade. Any other questions, guys? Hey, Stan, my pleasure. I hope that helped. I want everyone to become a better trader. Hold on to your money, right? Hold on to your money. Hey, James. Thanks. Okay? Be willing to brutally criticize yourself in a positive manner. And I want to, Dr. Steenbarger put out a note on this week. Okay? Don't call yourself stupid. Don't call yourself an idiot for not getting it. The game is hard, right? Game is hard. We're here to take money from one another, right? We're either working in conjunction to take it from others, or we're simply trying to take money from others, period, right? And there's no B grade, right? It's all A-level trading, right? If you can't compete at the top, you just can't compete. They'll take your money sooner or later. And it is infuriating for people. I know guys that have worked at this for years, and they can't put it together. They just cannot, right? And there's 3 things that get in the way of putting it together. You need the money right now. You won't slow down long enough to document what your actual setup is. Like this setup, right? I can be very clear on this setup. I'm looking for a series of pushes up, a close below my last push-up bar. Then I want to look for an opportunity, which is a whole nother subject of ways to get into that trade and push that trade around, right? Or I can't stand it when the market's not moving and I got to force a trade. Or I won't keep turning the cube around to look at it from different perspectives because it's just too freaking tiring, right? But what I have learned, and I think I'm better now than I've ever been, even on weeks where my execution's off, right, is this. You need to be able to outline and write down what your process is, right, in detail, okay? It needs to be auditable, meaning you look at the end of the week and you can say specifically, just like I did, this is what I did do, this is where I executed poorly, this is where I executed really well, and including proper stops, proper risk management, proper entry, all of it, right? And then you can go and look and go, this is my plan as written, this is the setups, these are examples of those setups, this is what I entered, right? Which is a lot of work, right? Which is why no one wants to do it, or very few want to do it, right? And then you have to hold yourself accountable. If you start losing money, stop trading. And I mean quick, right? Stop trading quick. It's so hard. When a guy calls me and tells me I'm down 50% in my account, coach me so I can make the money back, I can't do it because I can't get the guy out of the fear mode, right? Even 20 and 30%. Fear is almost impossible when it's palatable. All they think about is how much money they have to make, and they're not thinking. And the funny thing about it is, just like with CL today, and I purposely calmed down. I was mad this week. I missed a lot of really good trades. I screwed them up. I purposely settled down. Even today, I laughed off being in Sim. That was a huge trade for me. I left a ton of money on the table in NQ. A ton. A paycheck for a month. It was a great trade that I had loaded up in there. It was in Sim. What am I going to do, right? The only choice I would have had would have been to desperately try to get back in and stress the daylights out of myself. I had a nice trade in CL. Thank God it was in another separate account. And I got paid. And I'm just going to have to be grateful for that. Those are the things that you want to do in your free time over the weekend. If you do those things and you dig a little bit deeper as to what makes your best trades, what do those setups look like, and what are your worst trades, the patterns will appear in there, right? And usually what guys are skipping over when I'm coaching them one-on-one is I'll criticize them. Let's take a pretend person, since I don't have a coach. Let's just take Larry. I don't think I have a Larry, and I don't think there's a Larry in the room, right? And I'll go to Larry. Larry will go like, I'll talk to Larry. I go, well, Larry, what happened with your trade today? He'll go, well, I took the white zone, but I got nervous and I kicked it out for a point. So then I was only up $50, right, per contract, and I'm like, well, that's not very much money. And then I saw it go up 7 points, and I thought I should have had it. So what I did is I went over to NQ and I thought, well, I'll just scalp my way through. And well, then I lost the $50. So here's what happened. Then I lost the $50, and then I clicked a few more times. Next thing you know, I was down $800 in my account, right? And I'll go, wow, okay. So So then I'll go, well, how many losing trades in a row did you have? Well, let's not talk about that. And then I'll go, well, what was your strategy on those? Well, I was just watching the dome trying to figure out. I figured ES was so strong that NQ had to go. Okay. Well, how were you feeling? I was feeling fine. So if you're trying to tell me as a coach, right, and as another professional trader that, so this is what I would have told you, right? And this is how it really works, right? Well, here's the deal. I took my trade. I got pissed off because I was nervous about the trade to begin with. I wasn't confident in my trade plan. I kicked it out for $1 and made $50, and then I saw it go 7 points, and that made me mad. What was I mad about? I felt insufficient as a trader, and I felt stupid because I should have somehow known it was going to go 7 points, and I should have never had those feelings, right? If you can even acknowledge them, I should have never had those feelings of feeling scared about the trade to begin with. I wanted to feel confident. And now the market, not only that, the market's embarrassed me, and I don't like being embarrassed because I feel like the whole world just saw what a big schmuck I am. And so I'm going to show the world. I'm going to go over to NQ or CL or something I don't know very well, or ES, and I'm going to scalp my way through. Oh, well, I took one loss there. Well, what was your stop? Well, my stop was 1 point because I didn't want to lose any more money. Okay. Next, what'd you do next? Well, I put another trade in, but with another tight stop. I put another trade in. So what's your rules for stopping for the day? Oh, if I take 2 losses in back to back, I stop trading. And the next question comes, and then they'll finally say, Simon, you've hammered it enough. I know that I screwed up. And what people don't get about their trading is, no, Stan. I thought I was in real money and I was in sim. That's not nothing to be sorry about. It was my bonehead move. The whole point about that is you got to look in that mirror, real time, right, and go, what are your weaknesses? And I have it to this point today. When I left and I didn't come back most of the afternoon, the reason for it was I'm still steamed that I didn't get the NQ. And the funny thing about that is, so I was talking to my wife, who's a psychologist, and she goes, well, shouldn't you be happy because you destroyed CL? And I go, no, I'm not really happy about that. And she goes, why? And I go, well, because NQ was a monster trade, and I thought I was loaded to the gills on that trade, and it turned out, and I invested a ton of energy because I was afraid it was going to sweep me to the low. My stop was at the low of the day, and I stressed about it all the way through until I realized I was ready to scale a little bit of it, and I actually turned out I didn't have a single contract. And I'm mad about that, right? And I'm mad because part of my morning checklist is make sure you've turned on all your domes into real trading. And because I put them in sim since I leave my computers up, in case anyone breaks in, I don't want someone to be able to click on my computers, right? So I put them in sim. It's part of my checklist. What I found works best for most traders is once you mess up a trade on your first click, right? Most guys go, well, I'll get the next one right. But what I found is a tougher measure works better. If you can't get your first trade right, you don't earn the right to take your second trade, is what I would say. Okay, now some guys go, well, I have some traders who balk at that or whatever, and bad traders will always balk at that because they'll say, well, I don't know what my setup is. In which case I'll say, well, then you shouldn't even have one trade at all. You should have 0 trades at that point, right? But if you screwed up anything about your entry, right, or you came out of that trade before you planned to, right, and you can't make a decent justification for having come out, like it took an hour and I couldn't get my scale or whatever it was, whatever happens after that, your next trade has to be a perfect setup of what's in your trade plan, right, which may mean you stand there all day long, right? So I had to leave today. That was my defense. I give myself a C- for execution this week. I made some money. It was an okay week. It was nothing to be gloating about. Had I caught NQ today, I would have been gloating. and I did a really good job in improving on NQ this week. The profits are coming up there quickly, and so I'm back closer to being in my groove. Any questions? Okay, I hope everyone enjoys the games, football games, or whatever it is you do on the weekend. I'll be doing 2 twins, changing diapers, playing daddy. Looking forward to next week. Hey, the markets broke out. We have something to look forward to, right? Thanks, Randy. I have it recorded. I'll get it published over the weekend. I'm getting out of here before rush hour traffic gets bad.